All right, welcome everyone to How to Price Your Services, Phase 2, Part 4 of our 7-part Tiny training series um, with Montana Child Care Business Connect program of 0 to 5 Montana with support from the Montana Small Business Development Centers and the Department of Public Health and Human Services. Oh boy, here we go with the button pushing again. No curse words today, I promise. As a reminder for those of you who've been with us and those watching in the future, our Tiny training series is a series of 30-minute webinars every other Thursday. Attendance at 4 of these during each phase will give you 2 hours of ECP credits. Our goal with this really is to define some business concepts and to feature some of our programs. Today we're talking about pricing again. Next time we'll talk about managing your money. We're going to talk about where all the free money is. Just kidding. Next time in June. Just kidding. We're not talking about free money in June. We're talking about where the free money isn't. And then we'll wrap the end of June this phase of the Tiny trainings, talking about community organization, community services. Child Care Business Connect launched in 2022 as a program of 0 to 5 Montana. Really, our focus is to support communities, entrepreneurs across the board with the business elements of starting, owning, and operating. We do that by delivering trainings like this, one-on-one technical assistance. We also have a mentorship in the community capacity building cohort, and our web resource hub will be live this month. Currently, we're staffed by Rhonda, our program manager, myself. Haida runs our communication and outreach strategy. Shelby and Alex do our community level work. Jennifer Owen designed our mentorship program, and we are currently hiring. Our business advisor, which will build capacity and support what I do and stuff like this. And we're also hiring for a program assistant. And yes, those are hyperlinked in the slide deck, and you can go to them if you would like, or refer them out to friends, family, colleagues, and anyone you think might be interested in our work. My name is Jason Nitschke. I'm our Senior Child Care Business Advisor. I help people turn their visions into reality, and I highlight my resume just to say, we can teach you to do business. I learned how to do business, not by going to college, but by learning through the School of Hard Knocks. So we can teach you that kind of stuff, and that's what we're going to do today about pricing. We're going to first talk about pricing and why it's important. We're going to refresh on a previous training we did about pricing methodologies. I'm going to pontificate on my own verbosity about common mistakes I see in the pricing of products and services, and then we're going to go into what's referred to as the mixed model of pricing. But first, let's define some terms, as we always like to do. Let's define the term business. And for that, we go to our friends at the Internal Revenue Service. They have a definition of the term business, which is any activity carried on for the production of income from selling goods and services. And really what that means is the whole point of a business is to generate profit by selling your products and services. Meanwhile, they also have a definition of the term hobby, and I do find some recognition and overlap here from the childcare industry in particular. It's also common in the food purveyor world and some others as well. But a hobby, according to the IRS, is an activity that a person pursues because they enjoy it with no intention of making a profit. People operate businesses with the intention of making a profit. We're trying to help all of you become stronger business owners so that we don't have the crisis associated with low cash, low profit, and low compensation. Some terms I'll set the stage on that I probably will mention today and I may refer back to. One is cost structure. These are all of the operating costs and outflows of cash that go into running your specific business. Cost structures vary by business. The next thing we'll talk about here is revenue structure. And these are all of the ways your business generates income. Revenue structure also varies by business, and it also varies greatly within this industry, but depending on provider type and the various types of things that you all do. So let's first talk about why pricing is important. The first reason is pricing has implications. This is my sister and I in 2003 on the Snake River in Idaho. I was substantially younger and skinnier then, so was she. But at this point, I'm going to tell you a story about her on the next slide. The reason I bring this up and the reason I'm going to tell you this story, pricing has implications. It has implications on how high or how low your revenue is. which also then has corresponding impact and implication related to whether or not you can pay wages and benefits, including a business's ability to attract and retain its employees. Pricing also has implications on its ability to replace, upgrade, and replenish its classroom materials, on the quality of the overall program, on the satisfaction of your families and your constituents, on your employees' happiness, and on our ability as employers, as our friend Jennifer Owen put it to me yesterday, to bless our staff with financial security. Why is this relevant to a picture from 2003 when I was skinnier and more attractive, and my sister? Well, my sister is an accountant. During this period in time, my sister was going to college at the University of Montana to get her accounting degree. She's been through a number of employers like all of us have. Her current employer is an organization, an accounting firm that chooses to compete in the market based on price. Their prices for their services on average are 30% lower than their competition in the market. Correspondingly, their wages are 43% lower than the competition, and they cannot offer benefits. And we're talking about accountants here. So this is a very sizable dollar amount difference. And most accountants also receive benefits. So you can see just in my sister's example, competing on price with a substantially lower price point in the market has a meaningful effect on its largest expense of cost of doing business. So get ready. I'm going to ask you a question. Get ready to type your answers into the chat box here. Why is pricing important? I was in a nonprofit board meeting a number of years ago where this question specifically was asked of the various board members. Nobody was able to answer the question. What is the number one thing that every business must have? Must. For a business to operate profitably, what is the number one thing every business must have? Go ahead and type it in. It must have money. That's kind of right. Sort of, kind of. It's the number one most important thing is what I would argue. Clients, Harmony, you got it right. I am going to say the number one most important thing a business must have is a paying customer. Why is this relevant? Well, finding a paying customer requires some marketing. And for a paying customer to hand over their money to you, the price that you are charging must be justifiable for the value of the thing they're getting in return. And there is an overlap to marketing here. This is the marketing mix, the 4 Ps. Price, place, promotion, and product. Where you do your thing, how you message that thing and the value of that thing to your customers, and then the thing itself. All 3 of those are cost drivers. Price is a revenue driver. And so we do need to make sure that there is a feathering of an overlap of all of these various methodologies to be able to ensure that what you have is good enough, sufficient enough, and valuable enough for your paying customer, the number one most important thing for every business to have, to hand over their money to you instead of a competitor. Trying to click. Here we go. So I'm going to go over the pricing methodologies very, very quickly because we've done a training on this this year. And if you're interested in revisiting that, it was our February 23rd training called What is Cost-Informed Rate Setting, in which we step through each of these 3 methods and show how to calculate your per head, per child break-even rates per week, per month, per year, things like that. But there are 3 primary. Competition-based pricing methodology is what direct competitors in your immediate vicinity charge for the exact same types of services. The market-based pricing methodology is charging what customers in your immediate market can afford to pay. And the cost-based pricing model, which was the content of the majority of that February training, is setting prices based on your business's actual and potential operating expenses, plus a handful of other things like compensation to ownership and payment of profit to the company. So again, if you're interested in revisiting that, I would direct you back to our recording on our website and our YouTube page, which is linked here below, which you guys all have access to these slides as well. And the reason those things are important, again, is because our goal here is to generate income. We're not trying to get rich. We're trying to make sure that we have enough money to operate our business, pay our employees what they are worth, and what will keep them, and so that we can continue to be sustainable and viable moving forward. Stepping into a one-page slide, we're going to go over these relatively quickly. Some common mistakes, and depending on articles you read and places you go, there's 10, 15, 20, 30 different mistakes that you'll see in pricing. In my personal experience, as it relates to this specific industry, these are 5 that I have landed on. Pricing mistakes, not having a method, a comprehensive, well-informed method for determining your rates. Secondly, not being aware of 3 primary elements related to the cost of operation. Number 1 is the incurred costs that you actually every month will pay out. Every month you're going to pay your utilities, you'll pay your phone bill, you'll pay your wages and so on like that. Those are the actual incurred costs that everybody is aware of because they see it every month because they write the checks every month. Those are common. Everybody seems to be doing well with that. The next 2 are less common in regards to pricing accuracy and pricing accordingly and building these things into the cost of doing business. Potential costs and potential expenses are things like repairs and maintenance, travel, things that you don't incur every single month but have to budget and allocate for, because you know at some point the fridge is going to go out. At some point, a toilet's going to break. At some point, you're going to have to replace classroom materials. Not everybody budgets for those things. You have to budget for them every single month, and you have to charge for them every single month so that you can take that revenue, that cash that comes in, and set it aside into the rainy day fund bank account so that when you have the expense that needs to be incurred, you've got the cash available to do that. The third thing here is projected costs of operation. Projected costs of operation can be pay raises. They can be things that you have to be able to account for so that you have the money to do it when you need to spend it. So that can be the simplest thing to think of is the increase in cost of wages, or the increase in cost, the likelihood of the increase in cost of insurance and property taxes and things of that nature. So the third one here on the list is competing only on price. There's fundamental flaw in competing only on price. And I think my sister's example is a good example. When you're competing on price, it's a race to the bottom. You're never going to be able to compete fully on price and be profitable and comfortable at the same time. The other side of the exact same coin here is not pricing based on the quality of your services and the value that your parents and your families recognize in the services that you're delivering to their children. And then the 5th one here is not adjusting prices frequently, ever, or enough. And the concept here comes from the food purveyors, the restaurateurs that I have worked with over the years. What they are told to do is adjust a quarter every quarter. So go up a quarter every quarter and do it again next quarter so that it's an incremental impact on the customer base and not such a sizable and impactful and difficult pill to swallow when a big change happens. So those are 5 common pricing mistakes. Now let's get into the meat of, I think, what we're all here for today, which is some methodology. The mixed model approach includes all 3 of the things that I mentioned before: competition, market, and competition, market, and cost approach. Pricing accuracy is as much art as it is science, and the only way to know if you've got it right is to look at your revenue volume, the number of kids coming in and out every day, whether or not you are profitable, and have cash on hand at the end of the day. And Depending on what you read and where you go, there's more critical steps. I've condensed, I think, into 5 critical steps. Step 1 being knowing and covering your costs. Step 2 being knowing your customers and their ability to pay. Step 3 is knowing your competitors' products, services, prices, and value that they deliver to their customers. And step 4 being analyzing conversion rates and customer attrition. That's customer turnover. And step 5, focusing on quality and, again, overlapping your marketing mix to ensure that you're promoting and messaging the quality of your program to your families, to your communities. So let's go into some detail. Knowing and covering all costs, I've talked about briefly, and there's kind of 3 elements here. We all have to have a budget that is comprehensive. We also have to have a tool that we're doing our budget and our financial reporting with. So whatever that tool is does not matter to me. It should matter to you, whatever is best and easiest for you to utilize. But to know your costs, you have to, again, understand those incurred costs, those potential costs, and those projected costs that also take into account a decrease in enrollment as a percentage of your overall capacity for a variety of different reasons. That could be the management of your part-time kids. It could be employee illnesses, staffing shortages, and so on. And then just generally understanding how money comes in and out of your company and when. Covering your cost is, again, setting cost-informed rates at a bare minimum, and then diversifying revenue to ensure that you're generating revenue in ways that is not only delivering services to kids. I've got a whole nother I've got a whole nother thing that I could talk about on this, and we're going to talk a little bit about revenue diversification in June as part of that one-time funding training that we're going to do in June. And then the next thing, last thing in knowing and covering is managing it all. So not only having the budget, but having a monthly financial review procedure and conducting financial analysis, whether it be just you with somebody on your team or somebody externally like an accountant, or frankly myself. I've earned my living over the years, the last 9 years of my life, helping people with that money management portion. So that's step 1. Step 2 is knowing our customers and their ability to pay. And there's kind of 3 elements here that we're talking about. Some quantitative, this is the numbers related to all of these people in your community. The second thing is knowing what makes these folks tick, the qualitative knowledge of your community, not only just your families, but your community at large. And then understanding their purchasing behaviors and how they make their decisions. If pricing is the issue, if the cost is the issue, that is really important to know. But if you do have families in your community that are making value-based and quality-based purchasing decisions, that's important to know as well. Just a little bit of more detail here, not overly complicated, I don't think, but this, just starting with your families and then being able to branch it out, knowing as much as you can about your existing families currently enrolled, what percentage of your families are on Best Beginnings versus private pay, what percentage of those families receive other types of benefits, how many kids they have. Some of the history in the community is also really helpful to know. I had a conversation about this yesterday. Yesterday with the community. It's like, there's been so much it's a small community, so much turnover of childcare providers opening and closing and opening and closing. And whether or not we're a valid opportunity or, a provider for them is completely relevant to whether or not we can keep our doors open. But some of the data that you can gather from public sources, I've gathered this report here, which is a household budget expenditures report off of the Montana Site Selector website, which is publicly funded through state of Montana governor's office and the Department of Commerce. This report here, household budget expenditures, is for Bozeman. I don't usually use Bozeman as an example a lot, part because Bozeman is kind of an outlier and not really in line with what most of Montana is. And I also went to the University of Montana, so I hate the Bobcats. I think I got one laugh out of that one. Good deal. So in this case, we know about Bozeman that the median household income in Bozeman is close to $77,000, which accounts for 2.27 people. Their average monthly housing costs are about 35% of that. I couldn't afford that. Food costs seem low, transportation costs seem high, but the rule of thumb is, what can you generally afford to pay as a household for childcare? Some other types of things here, just having some baseline knowledge of this type of secondary market data is really, really helpful and informative to making overall pricing decisions and being accurate in that exercise. Step 3 here, know your competitors. How much can you know about them and whether or not you're tracking it? Best way to do this, go to the provider registry, search up your community, see who all is out there. Some communities, that's super easy. Some communities, it's not. And then the next thing is realistically, Google it, go to their website, see what information is available about them. And that's what I did with the first provider on the list here in Bozeman. Went straight to their website. A lot of these programs publish their rates, which I think is excellent. I advocate for publishing rates. And then what next? We'll do something about it. Track it and compare it to you. So this is a very simple spreadsheet that I created a number of years ago for another industry. I think it completely is relevant here. It's just, who is the competitor? What is their product or service? What are they charging? What do you think they charge? It could be an assumption. And then compare that to your price. And then the percentage difference. If you're going to compete on price, which again, I don't fully advocate for, although I recognize why it's important to understand this. If you're going to compete on price, it's really helpful to know in this just line 2 example, if you are 15% under the price of your competitor, your most similar competitor, is it possible that you can compete on price and win at 3% under their price as opposed to 15% under their price? The implication of that can be significant and meaningful. So the last 2 steps here I'll go over, analyzing conversion rates and customer attrition, again, has an overlap to a handful of things, including the marketing mix slide, as well as understanding consumer and purchasing behaviors. So this starts with your marketing and outreach strategies. What do you use and which ones drive the site visits and facility tours? How many of those site visits convert to enrollment is really important to know, because if your marketing mix isn't working, or we can make, hey, your pricing is wrong, or our marketing mix is wrong, or our messaging is incorrect, or our strategies need to be different or changed or improved. By knowing the conversion rates, that's great. Secondary stuff here, how many families do you serve? How many slots do you churn? How many turn over? And then probably the most important thing on this is why. If you know why you're losing families, you can do something about that. And again, maybe it's a pricing issue. Maybe it is a quality issue. Maybe it's a turnover issue. If you're turning over families and parents don't want their kids, for example, with a new teacher every month, maybe you need to pay your people more. There's a pricing implication there. Just an example. And the last step in the mixed model, I believe, is a quality focus. And I advocate for taking a systematic approach to quality improvements. CQI is the acronym here. There are a variety of different CQIs, continuous quality improvement strategy methodologies. Some here, Lean, Six Sigma, Plan, Do, Study, Baldrige, all of these. The selection of this methodology should incorporate your organization's goals, the feasibility of the data and other resources you have, the skill sets of the people participating, and ultimately the strategy that best fits your organization. If you want to learn more about this, there's a hyperlink at the bottom there. But really what we need to do is define what quality means to you and your program. I think the definition of the company's mission, vision, and value statements helps to really truly set a true north. And a lot of times this has something to do with your classroom philosophy, but also your business philosophy as well. If you can define what quality means to your families and employees, you can communicate those qualities internally and externally and build value in what it is that you do. I think that's critically important in what we're trying to do here, and further advocate for pricing adjustments and charging for your products and services exactly what you are worth. And of course, we always advocate for participation in the Montana Stars of Quality program, not because Rhonda was a part of that team that rolled it out, but because it's a good program. It's really important, and you will have a step ahead of competitors who do not participate in this program. And there are the 5 arms of that program in Montana and what those things are trying to help you achieve. So as we wrap here, we really encourage folks to use data to make well-informed pricing decisions about their competition and their customers. We want you to focus on quality and value to the customer, which is a marketing issue, and not competing on price alone. And then budgets. Budgets should always include incurred, potential, and projected costs, and then they must be managed as you move forward through the implementation stage. If you are interested in a little bit more on the pricing topic, the U.S. Small Business Administration has a pretty interesting series on this topic, pricing models for a successful business. It's in modules. You can watch those videos and you can pause them and stop them along the way. They're all pretty short. I don't think they're any more than like 5 minutes, each one of them in length. Of course, if you want some one-on-one help, there's my calendar. You can find it on childcarebusinessconnect.com. Coming up, we've got a few more financial topics in our Tiny Training series, how to manage your money, how to sustain without one-time funding. Those are in June, the first 2 in June, and then we'll wrap phase 2 of our Tiny Training program with community solutions. We do have 2 upcoming programs with First Children's Finance, managing enrollment in your center, and a business boot camp. As always, you can find our recordings on our website and YouTube page. There's our website, my contact information, how to get onto my calendar. But of course, happy to take questions in the final couple of minutes here. And if you would not mind, please let us know how we did today. So at this point, I'll open up and I'll take any questions. And Casey, could you just clarify the charts that you're referring to? Any other questions?
Oh, Jason, did you see Casey's answer? I wasn't sure either. I thought it was on the slides, but the charts where they can enter the data in.
This one? That one? I think that's what, it's just a spreadsheet I have. Happy to send it to you, Casey. I'll make note. All right, any other questions or talking points that I missed, Rhonda, or anybody else?
I don't think so. Janita had made a comment when you were talking about controlling variables that's been tricky to be able to do that. Yeah.
It always is. Yep. There are no magic bullets in any of this. These are just best practices and concepts I think that I have seen work. Casey's question. Boom. Childcarebusinessconnect.com. It's right there. Okay, we are at the hour. So of course, if you want to continue the conversation, feel free to shoot me an email, find us on social, schedule time. Thank you very much for joining us, everybody. It's awesome. Hopefully you're getting something out of these.
Thanks, everyone.
Thank you.
If somebody